This is an update for MatrixCV with some practical examples. The best way during the very emotional times when everybody has an opinion and it seems like maybe it's a good time to buy, a good time to sell, you don't know, to go to a chart, open it in a new tab. It will open a preset chart for you. At this time, automatically it will show S&P 500 ETF, which is what people call the market. It opens it up for you as a daily chart. Every bar is 1 day. And the moving averages, they displayed in the corner. You know which ones they are by reading moving average 200-day, moving average 50-day. The red one is an all-important 200-day moving average. Normally, it's far below the price. In the bull market, the prices are somewhere above 200-day moving average. It doesn't even matter. It just tells you that mathematically, not as a matter of opinion, but mathematically, the prices are going higher. They've been going higher for a while. It's been going on. It's a bull market, and you need to attempt to buy low, to buy low, to buy low. That's hard to say. And then to sell high. And the price labels that the stockcharts.com, this website, the price labels that it puts automatically, also according to a certain mathematical formula, it shows you if you have a succession of higher highs. See, this is some kind of a high, and this is some kind of a high, and this is some kind of a high, and each high is higher than the previous one, and the higher lows. This is most classic uptrend, the one that usually never lasts for too long. But now we have something that's gone in reverse. We had a high at, SPY is 1/10 of S&P 500. So we had almost 4,800. And then we had low of 4,500. And then it rallied a little bit and made a lower low. And then this high was lower than this one. So now you have lower highs and lower lows, which is a definition of downtrend. And at this time, today, even though today was a huge rally, see here in the thumbnail, it shows you zoom in of like last month of price action. This was a huge day, like 100-point moves in S&P 500 twice a day. But it's still below 200-day moving average. And it's below 50-day moving average, the blue one, the one that helps you to buy during the certain points and put a stop somewhere. So it's all lower. You could say before, I'm going to buy at 50-day moving average. Buy it here, buy it here, buy it here, buy it here. Don't buy it here because it never got there. Then it blew through it, so now you become cautious. But now, you want to buy attached to a 50-day moving average, but the price below it. See, this is the 50-day moving average. The price never even gotten to it. This is a market as a whole. 500 biggest and best stocks in the world. Let's look at the stocks of interest. DHL is the first one. So first of all, this was the box. I'm going to draw it in a second. This is definitely a box. This is a very good formation to hook up with your stop loss orders and your buy orders. So here you get whipped up. You had these highs. You say the price going to break out. You buy, it collapses. You sell on a stop, and you never touch it again. No other boxes ever broke up. I'm going to show it. I'm going to make a drawing in a second. But I want to measure the percentage moves. The percentages will be shown. Hold on. The percentages will be shown somewhere over here on the left side of the chart. If you click at any point of the price and then I cannot drag it right now. If you click and you drag it to whatever the lower point, then you will be able to read at the left of the chart how many percent the thing dropped. But you need to inspect for that. You need to click inspect. Then this pesky box coming up, so you can check every single day. What was it? It was August 18. And we were all ready to buy. And let's say we bought August 23rd. and then it went up and down, up and down, up and down, and collapsed. And you say, you know what, I made a mistake. When do you know that you made the mistake? You made it in about 20 days or so. First of all, it takes you, and then it will take you, what is it, 5, 7 or 8% loss. Because these are gaps. This is ADR, it's a foreign stock. And these gaps, well, you cannot do anything new. So you can sell this day, or you can decide to wait another day and lose 8%. But not 42. From top to bottom, the thing lost almost a half of it. The last time we saw it, it was somewhere in here. And I said, you know, if it goes over 66, then it's a new uptrend, you know, above 200-day moving average. The 200-day moving average was kind of playing with it. So maybe it's just like a good correction during the bull market, yeah? It fell to 200-day moving average, we bought the shit out of it, and it went up and up and up on its merry way. And none of that ever happened. From that point, it went down by 35%. And now, of course, it rallied by 23%, so that's not so bad. But I can't really make a box. Let's make a box. This is very descriptive. So you connect these tops, and you connect these bottoms, and it has to be visually about right. They don't have to touch exactly, but there has to be several moves up and down, up and down. There is something going on. Here is the high volume, here is the high volume. People getting positioned. And then it broke out. It broke out here, it broke out here, and it looked like a blue skies ahead. And then it collapses. So this is where a trader that wants to get position in DHL gets caught. We looked at it later. We said people already got caught. And now I can draw another box. I can draw like this. I can draw, well, the bottom level is kind of tricky. It's kind of area. It's not really a line. It's this. It's hard to tell where the bottom, well, that definitely fell out. Well, it's like this area right here. That, you know, this area right here. This is all like a lower buffer of this box. You can also draw a higher area. You can, if you get creative with these crayons, you can draw anything you want to see on a chart. But the point is, it was, see this 200-day moving average? The 200-day moving average, it fell so much it's already bending down. It's a bear market. It's a bear market in DHL. And this fall is a proof that there is a roaring bear market going on. The bears are in force. Look at this volume. Higher and higher volume, people capitulating. They getting out. Now, could this be the ultimate bottom? Yes. Yes. But it could be another leg down. From 42 to 0, there is a lot of ways to fall. And I have to say that if you look at the sister stock, in this Matrix article, I have this candle glance that can be opened even in your phone. You can put it into browser in your phone. They have a mobile version of this website, and you can do this candle glance group, and it will show in your phone like this. It will be a column, a really cool column. See, this is S&P 500 falling to shit, and this is DHL falling to shit, and this is UPS, which is really surprising. Kind of in the same business, yeah? But DHL is, of course, global, and UPS is mostly here. The stock symbol is UPS. Very easy to remember. Here we have a totally different story. The 200-day moving average is safely under the stock, and every time it touches it, it breaks it a little bit. It's kind of bottom for a nice rally of here, some 18%. I was measuring from here to here. Something like maybe, I don't know, You can never buy the bottom and sell the top, but the whole move was almost 25%. So you can take easily, like wait for 50-day confirmation and sell after the gap up and make 10% within days. But that's not an objective. The objective is to hold it for years and years, for the thing to go up and up. And by the way, UPS is having its own giant... What did happen? Something is wrong. Hold on. UPS has a giant box going on in there that you probably need to look on a weekly chart on to see sometimes these formations when the stock goes sideways and tops and bottoms are very close. Oh, I lost the internet. How nice. No, didn't lose it. UPS. Totally different picture. Totally different picture. And we can draw some kind of a line through the tops. And even through something on the bottom, maybe here. And this is the breakdown, and then the recovery, and it's back in the box. Broke out, came back into the box, breaking out again. So this is a constructive chart. The 200-day moving average keeps on going up, the price stays above it. You can use here to use 50-day moving average. You can see it could be cumbersome because of all the gaps, and perhaps not necessary because the stock haven't done anything since May of last year. It's exactly where it was in the May of last year. Nobody missed anything here. But DHL has been hit for like 50% during the same time. Very similar stocks, very similar companies in the same industry tells totally different story. Now, Uber. Uber is the same sorry picture. The 200-day moving average is safely above the stock. The stock is below it. It's a bear market, and it keeps on going down. And by the way, here is the thing about horizontal price levels. You can go down here and change the time period to 5 years, although on Uber you don't need to do it because it haven't been around for that long. And then period to weekly, and click update, and it will show, oh, I can take another year, 3 years. Yeah. So, the 38 level, where is it? The 38 level has been going on since IPO. That's how important it is. Here we're on a weekly chart. So your 200-day daily moving average becomes CMA 50. 50 weeks is almost 200 days. They're very close together, and they need 50 weeks to start counting. There is no average in the beginning. So you can see it's falling. Just the same way as 200-day moving average. It's almost the same. You can see it on both charts. So, of course, it's not like $38 on the nose. It's like that general area, price area, where it fell to after the IPO, and it attempted to take it 3 times back in 2020, and then finally broke above with a very impressive rally, doubled, and has been going down ever since. Now, it held it here in the fall of 21. It almost held it in the winter of 21. It kind of broke it in the beginning of 22, and now it really on the way to 25. And 25 is the next one that kind of, you need to look at it as more like an area, not as one price. But this whole drop that they wanted to cash out the previous owners of the company, and they did in here on this particular week. They did. And then the stock rallied. But this is coronavirus happened. This is a coronavirus. This March through May of 2020. So we don't really count this. It's happen to everybody. The 25, there's nothing beyond that, and we're almost there. You need to understand the price can keep on, there is plenty of room all the way to zero. It's not a guarantee that this thing will turn around and go multiples. It will, eventually it will. But first of all, at least, the very least, it's got to make some kind of a box. It's got to take some kind of a moving average. It has to start making new highs and new lows. Where's Uber? I can't even find a box in here. It's lower highs and lower lows. It's just a downtrend. There is no end in sight. Same story as in Etsy. You can look at a terrible 50% like within several months. Amazon, same story. Alibaba, well, that's separate. This is online. This is all of your online stocks. This is their general views. Etsy and the rest of them, whatever is online industry, this is their story online. ONLN. All the excitement of the lockdown is firmly behind us. This is 1 year. 1 year, 50% down. Yeah? Now, I want to point out something. All these tremendous drops, RSX, they don't necessarily, sometimes they will turn around, but they don't have to turn around. This is Russia. At 15, this was like once in a decade opportunity to buy. This was some of the lowest prices going back to financial crisis and such. It was 32 just recently, almost 32, and paid a huge dividend. It was adjusted down, it was 32, but then they paid gigantic dividend at the end of the year, like they always do. The mining companies, everybody, bank, Sberbank, they pay huge dividends at the end of the year, November, December, and that was it. And that was it. And this waterfall down, it stopped trading at $5, and this line, the same thing happened 100 years ago in 1917. It went line like this and never reopened. People never got anything back. Now they're going to close the borders of this country. So they cannot trade American stocks, and Americans cannot trade their stocks in there, and we don't even know if RSX will ever reopen. But if it does, you buy in Russia for nothing. Keep that in mind. And I don't know what's going to happen with Russian industry, with all the sanctions and everything, but we're looking at this enormous drop, of course, and a complete horror. But I want to point out something. You can change range to completely arbitrary and just roll it back like this. Before all this started, this is what Russia looked like. This is your coronavirus. This is 2020. I can roll it even further back. So first of all, you have 200-day moving average. So here it's under it and you don't touch it. Yeah, it doesn't take it. This is your 200-day moving average, the red line. And that was back in 2018. And it's untouchable. And then finally it broke up above it. And it came down to 50-day moving average. This is your good buying point. And off we go. It was possible to take shots around 50-day moving average. It was possible to draw a box through the prices. Broke out, back again, broke out again, came back, multiple chances to buy. Then something very similar happened in 21. I was not taking part of it. I haven't traded international stocks in a very long time. I stay inside the United States exactly for these reasons. So there was some kind of a box that was very hard to use for trading purposes, but still, above 200-day moving average, touching 50-day moving average again and again and again, it's absolutely normal tradable market, and there was nothing wrong with it until the guy woke up one day and said, let's bomb the neighborhood country, And then you have this. So don't think that the stocks cannot fall into nothing and never recover. They could. 85% in, what is it? No, hold on. Should have taken a closer chart. Hold on a second. I can't catch it. I want to count the days. If you click on any point and drag it more or less horizontally, on the left of the chart, it will show you the number of peak days. This way you don't have to close. It's 89 days. 4 months. Yeah? From the end of October. From князи to грязи. Yeah? Keep that in mind. Good night.